Welcome back to the deep dive. This week we're looking at something pretty interesting from the Colombo Stock Exchange. For the week ending September 4th, 2025, you had the main indices like the ASPI and the S&P SL 20 dipping slightly. But, and this is the kicker, the total market capitalization grew by over 18 billion rupees. Hit our heirs. 7.44 trillion. That's quite the paradox, isn't it?
It absolutely is. Yeah, a real head scratcher. And that's kind of our first clue, you know, the headlines. They just weren't given the full picture.
Right. Looks like a step back on the surface.
Exactly. But underneath, something much more deliberate seems to be happening.
Okay, so that's our mission for this deep dive then. Let's try and guide you through this complex scene. We want to uncover what's really driving value here, where that, smart money might be heading, and what it all signals. So to start unpacking this, what's the first big pattern you're seeing?
Well, the first thing is that clear divergence. It screams divergence. You've got some big index stocks maybe pulling back a bit, sure. But at the same time, significant value was clearly being created or maybe reallocated elsewhere in the market. This isn't really about broad market feeling or sentiment. Not at all.
Okay, so if it's not broad sentiment, then who is doing the buying and selling becomes really key. And the numbers here are, well, they're pretty stark. We saw this huge influx of foreign capital activity. Foreign purchases quintupled 5 times, and foreign sales tripled. The total foreign trading activity just exploded up by over 600%.
Yeah, and what's fascinating, right, is even though there was a net outflow overall about Rs, 851 million, that massive jump in activity is the real signal. It's just, a major re-engagement. International capital repositioning itself. They're churning portfolios, selling some things, maybe taking profits or cutting losses, but then making substantial new bets elsewhere. It points towards maybe longer-term interest, not just dipping a toe in.
That makes sense. So not running away, just reshuffling the deck. And it wasn't just foreign activity, right? The market's overall liquidity was up too. Total turnover for the 4-day week actually beat the previous 5-day week by over 3.4%. But, and here's another twist, the actual number of trades went down.
Yes. And that pattern, that's a classic sign of institutional money at work. When your total value, your turnover, goes up, but the number of deals goes down.
It means the average deal size is getting bigger, much bigger.
Precisely. Fewer, larger transactions. Suggests a shift away from maybe lots of small retail trades towards, institutions or high net worth individuals doing these significant block trades.
Okay, institutions moving in. And they weren't just buying randomly, were they? Highly selective. We saw really targeted leadership. Certain sectors just popped. Real estate management and development, transportation, utilities, all hitting new 52-week highs. Utilities, for example, closed at a new high, but with a pretty low price to book of 1.06. Transportation also hitting an all-time high and showing remarkably low PE and PBV ratios. What do you make of that selectivity?
Well, it tells you investors are making very specific thematic bets. High conviction plays. For transportation, those low ratios, PER and PBV, suggest it's either incredibly profitable relative to its price or maybe seen as undervalued, perhaps driven by one really impactful company in there. Real estate, with a higher PR, implies investors see strong growth potential, maybe a flight to tangible assets. These look like strategic allocations, definitely not just index tracking.
And you see that echoed in the individual company winners, too. Stocks like Myland, Equity 2, PLC, reinforcing that real estate push. Panasian Power highlighting utilities. And we have to mention the crossings, right? Those big off-market block trades. JKH saw a massive one, Rs 5.3 billion. Commercial Bank had several large ones, too, totaling over Rs 1.5 billion.
Absolutely crucial, those crossings. They represent serious long-term capital moving strategically. Think about it, that one JKH trade on September 1st. It was over 16% of the entire week's market turnover. That's like watching a giant battleship change course. Not just a bunch of small boats milling around. These are sophisticated moves. And they happened while, interestingly, the overall market valuation got a bit more attractive. The PE and PBV ratios actually dipped, and the dividend yield went up.
Okay, so let's pull all these threads together. For our listener, what's the kind of the main takeaway from this week at the CSE?
I think the big story here isn't about the overall market direction indicated by the indices. Forget that for a moment. This week felt like perhaps a crucial turning point. It was marked by this really powerful, maybe even unprecedented level of activity from foreign and institutional investors. And they weren't just active. They were making very focused, high-conviction bets, piling into specific areas like real estate, transportation, utilities, driving those sectors to new highs, even while the broader market valuation looked arguably better value.
So what this deep dive really highlights is that sometimes the most important signals, they're not in the headlines, are they? They're hidden in those deeper currents, the capital flows, the targeted bets. Which leads to our final thought for you. What deeper patterns, what concentrated movements might be shaping the markets you follow, hiding beneath the surface of the daily index changes? Something to think about.